A glossy trading website means nothing without regulation. KNGFX presents itself as an online broker offering access to Forex, CFDs, commodities, indices, and possibly crypto instruments. The website uses standard brokerage language, fast execution, competitive spreads, advanced trading tools, professional support. On the surface, it looks like another global trading platform competing for retail clients. But once you move past the marketing layer and begin checking verifiable facts, the structure starts to look fragile. The core problem is not design, it is regulation. And regulation is where KNGFX becomes difficult to verify. The platform appears to offer leveraged trading products, likely CFDs. It promotes market access and account-based trading services, yet it does not clearly present a confirmed top-tier financial license that can be independently verified in official public registers. That is the point where risk begins. Brief summary. KNGFX promises access to global markets, leveraged trading, and brokerage services. It presents itself as professional and internationally accessible. However, checks through official regulator databases do not confirm a clearly verifiable license attached to the domain. There is no easily identifiable legal entity transparently tied to regulatory supervision. Without confirmed authorization, investor protection mechanisms remain uncertain. The conclusion based on publicly verifiable information is simple. This is a structurally high-risk platform operating without clear proof of oversight. General information overview. Project name, KNGFX website, https://kngfx.com. Project type, online broker, CFD trading platform, regulation, not confirmed, license, not publicly verifiable, minimum deposit, not clearly disclosed in transparent regulatory context, leverage, appears to offer leveraged products. Domain registration. Public WISUNO data indicates relatively recent registration with privacy protection. Registrar, ACH, DNS, third-party registrar with infrastructure likely protected via Cloudflare or similar service license and regulation verification is the first and most important step in evaluating any broker. Legitimate financial intermediaries operating in Europe, the United Kingdom, Australia, or the United States must be listed in official registers. A review of these official databases does not confirm a clearly identifiable regulated entity directly connected to KNGFX.com. The correct legal formulation here is precise. Verification through official registers does not confirm the presence of a license. That does not automatically prove fraud, but it does mean there is no evidence of regulatory oversight. This distinction matters. A licensed broker is required to maintain capital adequacy, segregate client funds, provide negative balance protection in certain jurisdictions, submit to audits, and offer formal dispute resolution mechanisms. An unlicensed broker is not legally bound by those standards. When regulation is absent or cannot be independently verified, the client bears the entire structural risk. Now let us examine the trading model. KNGFX appears to offer leveraged instruments, most likely contracts for difference. CFDs are inherently high-risk derivatives. When offered by a regulated broker, they come with mandatory risk disclosures and leverage limits. In the European Union and the United Kingdom, leverage for retail clients is capped at levels such as 1 to 30 for major currency pairs. If a platform offers significantly higher leverage without referencing a regulator, that becomes a red flag. Another issue is conflict of interest. Many offshore or unlicensed CFD brokers operate as dealing desks, meaning the broker can be the counterparty to client trades. That creates a structural incentive misalignment. Without transparent regulatory oversight, clients cannot independently verify how orders are executed, whether prices are derived from real liquidity providers, or whether the platform operates as an internalized system. WISUNO and domain analysis provide additional context. Publicly available WISUNO data shows that the domain KNGFX.com does not have a long institutional history attached to it and uses privacy-protected ownership details. While privacy protection is not illegal, established regulated brokers typically disclose their corporate identity clearly and link their domain to a registered legal entity. Short domain history combined with limited corporate transparency is a common pattern among high-risk online investment platforms. Infrastructure indicators such as use of content delivery networks or Cloudflare protection are not inherently suspicious. Many legitimate businesses use them. However, when combined with hidden ownership and absence of regulatory proof, they reduce overall transparency. Transparency is the foundation of trust in financial services. Without it, clients operate in informational darkness. Legal transparency is another weak point. A properly regulated broker must clearly state its legal entity name, registration number, governing jurisdiction, and regulator. It must provide a client agreement tied to enforceable law. It must disclose how client funds are stored and whether compensation schemes apply. In the case of KNGFX, there is no clearly verifiable regulated legal entity publicly connected to the domain through official databases. There is no confirmed investor compensation scheme protection. There is no independently verifiable supervisory authority overseeing its operations. This creates a structural vacuum. In the event of withdrawal issues, execution disputes, or account restrictions, the client would have no confirmed regulator to escalate complaints to. That is the difference between a licensed broker and an unlicensed broker. Common structural risk indicators observed here include absence of confirmed license in official registers, absence of clearly verifiable regulator, lack of transparent legal entity details, absence of confirmed investor protection framework, elevated risk of financial loss due to leveraged CFD structure, potential withdrawal issues, in absence of oversight, how to avoid similar scams. Always verify a broker's license directly in official regulator databases. Do not rely on logos displayed on a website. If a company claims to be regulated, search the regulator's official website using the exact legal entity name and confirm that the approved domain matches the one you are using. Be cautious with CFD trading, especially when high leverage is offered. High leverage amplifies losses just as quickly as gains. In many investment scam and CFD scam structures, unrealistic leverage is used to attract inexperienced traders. Avoid platforms that do not clearly disclose a legal entity, jurisdiction, and license number. A real broker has nothing to hide. Do not trust certificates from unknown third-party sites. Real regulation can always be verified through government-run databases. Pay attention to design patterns. Template-style layouts, generic brand names, and stock images are common in serial, unlicensed broker operations. Be wary of aggressive account managers promising fast profits. Pressure tactics and guaranteed returns are classic warning signs in investment scam environments. Based on publicly verifiable information, KNGFX cannot be considered a confirmed licensed broker. Checks through official regulatory registers do not confirm a valid supervisory authorization tied to the domain. The absence of transparent legal and regulatory backing creates a high-risk environment for investors. Without confirmed oversight, there is no guaranteed investor protection mechanism. Our experts recommend refraining from any financial interaction with this project. In financial markets, regulation is protection. Without it, you are trading alone.